I'm Teresa Skubic, and this is Forum Daily for Monday, September 1st. Canada's labor market is under growing strain. As of August 8th, 2025, the national unemployment rate climbed to 6.9%, its highest level since the end of 2024, raising fresh concerns about the health of the Canadian economy. While the OECD has projected that Canada may narrowly avoid a recession, the outlook remains fragile, with economic growth expected to stagnate in the months ahead. These labor market signals pose a tough challenge for both investors and policymakers. Rising unemployment often dampens consumer confidence and spending, which in turn can weigh on corporate earnings and slow broader market performance. To help us break this down further, I'm now joined by Brendan Caldwell, director at Caldwell Securities Limited. Brendan, thank you for the time today.
Happy Labor Day, Teresa.
Happy Labor Day to you as well. But as of August 2025, Canada's unemployment rate rose to 6.9%. And I mentioned it was the highest level since the end of 2024. How do you think that the rising unemployment rate will affect investor confidence?
Well, it's a tricky one. I think if unemployment rate goes high enough and that it begins to impact people's ability to pay their mortgages, for example, that could have a negative effect on the Canadian banks. But the connections tend to be a little bit indirect. Um, just because there are fewer jobs to be had doesn't mean companies are making less money. In fact, I think one of the reasons that the unemployment rate is edging up is that companies are using the excuse of the tariffs, and in some cases not excuse. Companies it's a genuine
Mhm.
concern, or definitely the excuse of AI to hire fewer and fewer people. So to the extent that companies' hiring expenses are down, the amount of money that flows through to the bottom line may actually be greater. So a little bit of a less indirect or a little bit less direct connection. You really have to go, I think, through the banks and the mortgage market before you see a direct connection between people losing their jobs or not having jobs and the impact on the stock market.
And what impact might the high unemployment rate have on Canadian corporate earnings forecasts and stock market performance in the next 6 to 12 months?
Well, it'll be a tricky one because I think it gets to a certain point and the stock market will react to not so much the labor but some other things that might come out of it. If there was a slowing in economic growth, a lack of demand for resources, I think some of those are much more likely to impact the stock market. Our biggest two sectors, of course, are financial services and energy. Uh, Now, energy is oil and gas, a much more of a global commodity, so prices around the world would have to come down. But to the extent that the financial services sector is impacted, people not able to repay their credit card debt or cover their mortgages, or the industrial and transportation demand goes down, you could see the financial service stocks and energy stocks take something of a hit.
And what risk management strategy should Canadian companies and investors adopt in the face of these industries that are severely affected by trade?
Well, it's a funny one in that the market has already taken a lot of the trade concerns, I think, into consideration. I think so. In any case, I mean, the Canadian market took quite a hit when the whole elbows up thing was talked about in response to the Trump tariffs announced earlier this year. It seems as though our government's walking that back a little bit with the retaliatory tariffs coming off goods that really it should have never applied to in the first place because they were covered by the North American Free Trade Agreement. So I do think that investors should look at stocks, particularly in Canada, as a company by company. And I don't think there's any sectors that are necessarily off limit. I think there's good opportunities right across the country, at least in part because a lot of the tariff concerns are already built in. Um, And I think there's going to be continuing demand for what Canada makes for the foreseeable future. In terms of companies themselves, I think, as it was once said, incidents are used to do things you want to do anyway. And I think that it is easier for companies to cite external pressures that everyone can understand or pretend they understand, like tariffs or AI, as reasons for either downsizing or not hiring at all. So you may see corporate profits actually get something of a boost simply because their employment expenses are less. As we also seen though, it's not stopping um, employees from demanding higher wages, and quite understandably so, because prices have gone up considerably. We've seen two very high-profile government, or once was government, work stoppages, post the Canada Post and Air Canada in the last little while. The flight attendants union, as tens of thousands of workers are demanding to be paid more. So it is, on the one hand, a fair and reasonable demand to want to be paid a living wage. On the other hand, for employers, more people demanding more money means probably you're going to want to hire fewer people. Outside of a union environment, I think there will be more of that.
And which industries have shown resilience in the face of a weak job market? And can these industries absorb unemployment labor in other industries?
Well, I think what's actually been happening, not so much industries, the only net employers in Canada have been the various levels of government. The federal government, in particular, has had a tremendous hiring spree really since COVID began. So for the last half decade. Now, our Prime Minister, Mark Carney, has said that he is looking to cut costs right across the board. And there's really no way to cut costs at the federal level without cutting people. So the only resilient sector has been the government sector. How long that remains to be seen. Again, incidents are used to do things you want to do anyway. Various levels of government are demanding people come back to work full time. I think that's, at least in part, as an easier way to figure out who to cut. So no, I don't think there's a lot of resilience. I mean, even here in downtown Toronto, the center of capitalism in this country, it was really tough for young people to get a summer job.
Mhm.
Not many companies seem to be hiring very many. Our company was somewhat overrun with young interns, but it's not generally been the case. And I think that's true at all the more junior levels, as it is perceived, or at least the extensive reason being given, is that AI can do a lot of those functions. Now, if AIs can do those functions, AI probably needs to grow up to be able to do all the functions. So if you're a legal firm or an accounting firm and you're not hiring young people to do the entry level jobs, eventually the AI is going to need to do your job too. So careful what you pray for.
And although the OECD predicts that Canada will avoid a recession, economic growth is expected to stagnate. In your opinion, what fiscal or monetary policy should the government adopt to stabilize the job market?
I think that's a good one. I think, for one, I hope the OECD is right that we don't actually go into recession, but to say that there's no growth, that's effectively a recession, because if there's no growth and yet the price of goods and services are going up, you are in an inflation driven recession. I think what we've seen increasingly, particularly since the beginning of this decade, exacerbated by COVID, but a trend that had been going on for a long time, is that the solution to every problem is a government program. My government employment is good as far as it goes, but we're now down to, I think it's maybe 3 private sector workers to every 1 government employee. You can't increase that ratio too much more. You can't have too many more government sector workers, because there just isn't going to be the private sector people to pay for it. So I think the real thing, it's not going to be a big vote getter, but to create a more robust capital markets. The capital markets, the ability to raise money in Canada to develop a public business, has really shrunk. There's been, I think, 1 public listing of a real company on the Toronto Stock Exchange in each of the last 2 years. That is not sustainable, as companies buy back their own stock and get taken over. Public companies are so important to the growth of the economy and also to the middle class because it allows people to invest in the country's best economic ideas. So if they had one policy which will get them no votes, but longer term, even medium term, help the Canadian economy, make it easier for companies to grow, thrive, develop, and become public in this country.
Well, Brendan, thank you so much for the time today and happy Labor Day.
Happy Labor Day, Teresa. Thank you.